Good afternoon, everyone. I'm Namita Wahi. I'm a senior fellow at the Center for Policy Research and director of the Land Rights Initiative. And on behalf of the Center and the Land Rights Initiative, I'm very pleased to welcome all of you to the 11th talk in the Land Rights Initiative Legal History Speaker Series. The topic of our talk today is Simplification or Repackaging, a critical look at the income tax bill of 2025. And our speaker here with us is Mr. Amit Singhania.
Thank you.
I want to take this opportunity to thank all of you who have been a part of the Legal History Speaker Series over the last 11 months. To tell you a little bit about the Legal History Speaker Series, we launched this as one of a series of events in order to celebrate the 10-year anniversary of the Land Rights Initiative, which we celebrated in November last year. And the reason for starting the series was because all of our work at the Land Rights Initiative, whether it is on land acquisition, land rights of scheduled tribes in scheduled areas, health rights, water rights, forest rights, has adopted a legal historical lens to evaluate policy questions in the present. And as we began the series and looked at the various legal reforms that have happened, especially over the last decade, we realized that, even though there have been, for many of the areas of law, significant continuities for long periods of time, even between the colonial and the post-colonial period, there have been significant moments of disjuncture. So in our own work at the Land Rights Initiative, we, our flagship project, which is the Mapping Indian Land Laws project, which is essentially an archive, an interactive exploratory archive of all land laws in India. We found that out of 500 laws that are currently on the website currently has laws, all laws that have been enacted by the center, as well as 8 states. Out of these 500 laws, 150 are colonial laws and 350 are post-colonial laws. And so so there are significant continuities in the area of our work between the colonial and the post-colonial period. A significant moment of disjuncture, of course, and rupture, of course, was the adoption of the Constitution in 1950, where for the first time, all of us went overnight from becoming subjects of the British Empire to becoming citizens of the Indian Republic. And that's how we trace the colonial and the post-colonial period in the way that we see the legal reforms that have happened, because the motivations of the colonial state were very different from the motivations of the post-colonial state. The colonial state's goal was essentially to maximize resources from revenue and so on, and essentially preserve the empire. But at the same time, there was a great drain of resources from India to the colonial rulers, right? The motivations of the post-colonial state were, however, very different. And we see this in the archive of laws that we have created. If we, the archive itself, as I said, is in the form of an online database with summaries of the laws, as well as the ability to classify the laws and search them across states, across subject matter, but also across decades and timelines. The goal of creating the archive essentially is for researchers to actually capture trends in the way things have changed, especially with respect to the legal organization of land between the colonial and the post-colonial period. And the post-colonial state's motivation, the independent Republic of India, was essentially to maximize resources and redistribute them, and to bring about development, to eradicate poverty and hunger for the people of India. So with that goal in mind, we have been looking at at various legal reforms that have taken place. One important area that we need to look at is taxation. We already had a talk on taxation in January on the goods and services tax, and this is our second talk in the area of taxation. And taxation, in a way, is critical, not just to the sovereignty of a nation, because when we think about the sovereign powers of a state, there are four powers that are inherent in the state sovereignty. The first is a foreign policy, the ability to conduct foreign relations. The second is the power of eminent domain, which we have worked on extensively at the Land Rights Initiative. All of our work on land acquisition, as well as our work on the constitutional right to property is really about the limits and the space within which the power of eminent domain can be exercised. The power of eminent domain, very simply, is the power of the state to take away land, that is privately owned for the public good, so long as it is pursuant to a validly enacted law, as per procedure established by the law, and upon payment of compensation. And the reason why we have this, right, is because the post-colonial Indian state, in order to bring about development, in order to bring about redistribution of resources, it has these powers so that it can actually take up land for building public infrastructure, for highways, for industry, and so on. The third power is the power of taxation, because how are we going to finance any of the developmental projects that we need to, in order to, eradicate poverty and hunger and to provide the kinds of goods and services that are necessary for the people? So taxation is very critical to the developmental state's ambition, but also is very critical to the relationship between the state and citizens. I mean, historically, American independence really happened because of the principle of no taxation without representation, because the American colony was paying taxes to the British government, but they did not have representation in the way those taxes can be allocated and used. And that principle sort of goes to the center, or it goes to the core of the way the taxation powers are distributed in the Constitution as well, because we are a federal country. Like the United States, we are a federal country but we have a unitary bias. So under the Constitution, we have three lists under the seventh schedule where powers are to be exercised by the union, the state, and by both the union and the state concurrently. And we have spoken about indirect taxes, which are powers that are exercised by both the union and the state. We talked about it in our GST talk in January. But today we are going to talk about income tax, which is a power that is exercised, the power to tax income, which is a direct tax on the income of individuals, is something that is vested with the union government. That being said, at the time that, it's very timely that we're having this talk in April, because not only is April the start of the financial year, but also, this April, we have been preoccupied with taxes all over the world, essentially because of President Trump imposing tariffs on goods that are being sold by different countries to the US. And tariffs are essentially taxes, but they are again a form of indirect taxes, which, as I mentioned, we've talked about earlier in January. Today, we are talking about direct taxes, but the week in which we are having our talk is very significant, because, as we know, Dr. B.R. Ambedkar, we just celebrated Ambedkar Jayanti on Monday. And, as the founding, the chairperson of the drafting committee, one of the founding fathers of the Indian Constitution, Dr. Ambedkar had certain very clear principles about not just the nature of the Indian Union, because, why did we have a unitary, a federal, why are we a federal country with a unitary bias? How are the powers between the union and the states organized? Was essentially because they felt that the union needs to be strong. The union needs to have more powers than the states, which is not necessarily the case in other federations like the United States. So this question of federalism and the distribution of center-state relations comes up in various areas, including the area of tax, especially because, as I mentioned, income taxes are taxed by the union. And when we go back to the colonial period, the biggest source of taxation was land. And again, land revenue was the biggest source of taxation land revenue was the biggest source of revenue. So land tax was the biggest source of tax for the British government. And but it was seen as very exploitative, which is why in the Constitution, we do have provisions for agricultural taxes, but those provisions and those powers are vested with the states. Um, and yet, many of the states have actually more or less abolished, land taxes because of the fact that it was essentially putting a lot of burden on the poor. And that was not in accordance with Dr. Ambedkar's vision of what the Constitution was about. As we know, Part 3 of our Constitution guarantees to all citizens and the fundamental rights to life, liberty, and equality. And also, Part 4 of the Constitution contains the directive principles of state policy, which impose upon the state various obligations, including the obligation to ensure that everyone has an adequate standard of living, to ensure that the resources of the community are best distributed so as to subserve the common good, and thirdly, to ensure that we prevent concentration of economic wealth and power. So those are obligations upon the state. And specifically on taxation, Dr. Ambedkar outlined six principles that have been enshrined within the Constitution, but also within the framework of the Income Tax Act of 1961, which was the law that has been governing our lives until recently. So, what are these six principles? The first is that tax must be levied on taxable capacity or income. Taxes must be progressive, that is, the rich must be taxed more and the poor less because it is based on your capacity. Exemptions to taxpayers should be allowed to those who have incomes below a certain limit. There should be equity and efficiency in taxation. And we are going to unpack in this talk what these terms really mean. And no taxation system should be allowed to be manipulated to lower the standard of living of the people. So with these principles in mind, with taxation being so critical to the relationship between the sovereign state and its citizens, the fourth power, which I forgot to mention, are police powers. And we talked about police powers in our second talk, which was on the criminal laws, which have also gone through reforms. So, and all these powers sort of intersect with each other, because in my own work on property rights, where I've done a review of all property cases that have been decided by the Supreme Court and the High Courts, we find that a lot of the, contrary to the general popular perception that a lot of the property rights were about land rights of zamindars, actually only 20% of the cases are about land acquisition cases relating to abolition of zamindari. Nearly as much as 20% of cases are really about taxation, where people use the constitutional right to property to actually prevent taxation measures because of the fact that certain procedures were not followed or certain people were not taxed properly. So taxation, in that sense, was critical to property. Now we don't have a property right in the Constitution. It'll be very interesting to see how people are opposing sort of abuse of power with respect to taxation, or where taxation has not been done properly. So there's a very close linkage between eminent domain, constitutional property rights, and taxation on the one hand, and on the other hand, there's also a very close linkage with police powers and taxation, because as we know, in the income tax law, we have provisions for search and seizure, for survey operations, and so on. And therefore, what is permissible procedurally under the law and what is impermissible, and how it intersects with the provisions under the criminal procedure codes, is also very important for us to understand, because on the one hand, the government needs to exercise its police powers to prevent evasion of taxes, but on the other hand, we also have Part 3 of the Constitution, which is guaranteeing the fundamental rights to life, liberty, privacy of citizens. And these questions become very important because we have this new income tax bill, which was introduced in Parliament, I believe, in February this year, and it is going to take effect next year. And the stuff that has been mostly in the news has really been about these police powers that have been expanded in the context of this bill to include, within the search and seizure and survey operations, access to digital resources, including emails, WhatsApp, and other things. So, there's a lot of, it has created a lot of controversy or like fear perception in the minds of the public, that is this the government overreaching into our privacy, and what does it really mean, and what are the how do we balance the rights of citizens versus the obligation of the state to ensure that tax evaders can be brought to book and resources can be distributed. The law is the bill is currently before the Lok Sabha Select Committee. In fact, even as of today, they are hearing submissions by the Institute of Company Secretaries and the accountants, in submissions from the cost accountants of India. And uh, finally, I just want to say that uh, over the last 10 years, we have seen reforms in a lot of different areas by the government. And within income tax as well, we have seen a great increase both in the numbers of income tax filers as well as in the amount of income tax that is collected. But as we have talked about in other talks in this series, the bankruptcy talk, the competition law talk, we have individual tax filers, but we also have the Hindu undivided family, we have limited liability partnerships, we have companies, we have corporate taxation. And the question is it would be really interesting for us to understand who exactly is paying income tax, right? And even though the numbers have greatly increased over the past 10 years, total direct tax revenue has risen by 182%, according to data from the Central Board for Direct Taxes. And there has been a sharp increase in personal income tax or collections of individuals by 293%. But there hasn't been a commensurate rise in the corporate contributions to taxation. And despite this great increase, we only have still less than 7% of Indians are paying income taxes, direct taxes, again, distinguishing from indirect taxes like GST, which are being paid by all Indians. So the question is, the question really that comes up is that are we satisfying Dr. Ambedkar's vision of an efficient and equitable taxation system that has prevailed since 1961? And how is the new bill going to change those, things that will it bring about greater efficiency and equity? Will it balance the rights of citizens? And so with all these questions in our minds, it is my great privilege to welcome Mr. Amit Singhania to CPR. Welcome, Amit, if I may.
Thank
Is
you.
the founder of Areete Law Offices. He has over 20 years of experience as a lawyer and a chartered accountant. So he's eminently, suitable to answer all of our questions. Prior to founding Areete Law Offices, he was an equity partner at Shardul Amarchand Mangaldas Company, where he worked for over 16 years, and with PricewaterhouseCoopers Private Limited for 4 years. He has advised a number of clients on a range of corporate and taxation matters, including M&A and general corporate, as well as the police powers part of taxation, white-collar crimes and investigations. He has advised recently a US-based conglomerate in a multi-billion-dollar transaction involving acquisition of an e-commerce aggregator. He has also represented a number of major groups like the Hira Group, the Kundan Group, and Indian healthcare companies, as well as the IDFC Foundation before tax authorities in the High Court of Delhi in relation to tax disputes. And he has represented the Waree Group on a number of investments in the technology space and the Enam Group in several transactions involving a significant minority stake pre-IPO. He's a regular speaker at conferences organized by the CII, the IBA, the FICCI and ASSOCHAM, and has contributed numerous articles to journals and newspapers on issues relating to taxation and corporate law. He has also been recognized in Forbes' top 100 legal power list for individual lawyers in 2023, as well as a leading lawyer by Legal Era, and recognized for his income tax practice by Chambers Asia Pacific. I have personally benefited a lot from Amit's advice. So he's definitely a friend of CPR. And, I think that we are in a moment where we have, even though the government, and rightly so, has been trying to ensure that tax evasion, it has been a key focus of the government through various legal reforms to ensure that more and more taxations can be done, because for a mature economy, for a country that is trying to become a developed country, 7% people paying income tax is a really low number. So and it is great to see the progress that has been made in sort of increasing the number of income tax filers, and so on. But we also have a situation where more than half of those who have filed income tax returns have actually reported zero tax. So more and more people are being brought into the system into a formal way. But at the same time, and tax collections are definitely rising for sure. is it happening in an efficient and equitable way, and what more can we do to actually, to actually ensure that we have more resources and the burden is not falling on the poor, but rather it is falling on the rich. But also we are seeing, taxes, and it is a bit worrying that the corporate taxation is not rising as much as the income tax, because at the end of the day, taxes are to be derived from profits. And while at the same time, we are also seeing a lot of scrutiny of the non-profit sector in taxation, not just in India, but also all over the world. So I think that we really need to understand how the principles of our constitution and those advocated by Dr. Ambedkar, how are they resonating within our tax structure? So thank you so much, Amit, for joining us. And without further ado, I turn it over to you.
Thank you. Thanks, Namita. I think the most difficult part of any session is acknowledging your introduction. And over a period of time, I have observed that my profile has been lengthening, and I think I need to shorten it, because this is something which is, at least I don't know how to deal with these kind of introductions. But without wasting further time, I just wanted to jump upon my slides. And I would also like to highlight, this is quite a timely discussion on this particular critical topic, which is the Income Tax Bill 2025. In the last decade or so, we have seen many laws have been revamped by the government of India. And as rightly said by Namita, that we are in the phase of evolution where the pre-colonial laws have been revamped, and we are trying to frame the new laws. But I think, and the tax is an important topic. Now, in this particular presentation, we are going to see whether we require this income tax bill, what are the changes which has been introduced in this particular bill. So that's why you can see the title of the slide is also whether it's a simplification or just a repackaging, whether it's a old wine in the new bottle with little dressing or icing or a flavor, that we are going to have a deeper look into it. What is something that one can expect into the new income tax bill? Currently, we have the Income Tax Act, which is known as Income Tax Act 1961. And there is a new bill which was introduced on 13th of February 2025 in the Parliament by the Honorable Finance Minister. And this bill is being known as Income Tax Bill 2025. As we speak, after the introduction of the bill into the Parliament, the bill was referred to a select committee. And as we speak, the select committee is into the consultation mode. It is being consulted with the tax expert as well as the industry, as well as various associations like Institute of Chartered Accountant, Institute of Company Secretary, Institute of Cost Accountant. So this bill is currently under the consultation mode by the select committee, and whatever recommendation that may come out, that may be incorporated into the income tax bill, and it is slated to become a law sometimes next year. So we are not very sure whether we will see whether we will have a budgetary announcement. So obviously we will have a budgetary announcement, we will have a budget, but whether the tax related proposals will be the part of the budgetary announcement or not, that we are not very certain, because in case the government announces this particular bill to become an act, then there will be no purpose for having the income tax proposal as the part of the budgetary announcement. Whatever they want to do, they can do in this particular bill itself. So in this particular presentation, we are going to touch upon the evolution of tax in India. We are also going to see what are the features of the income tax and what are the spirit of the income tax legislation as enshrined by Dr. Baba Sahib Ambedkar, and whether we are still following those spirit and the principles. What are the limitations into the current Income Tax Act 1961, and how these limitations has been addressed into Income Tax Bill 2025. Then we are going to also touch upon the brief highlights of the bill, not only the broader not only the broader conceptual distinction between the Income Tax Act 1961 and the Bill 2025, but also generally what are the various heads of income into the income tax bill, how the various heads of income are being taxed, or what are the various legislation taxing the various heads of income under the bill. Then we will also touch upon some of the controversies, as you may be hearing over the net, that there are certain controversies which has crept in because of certain new provisions into the bill. Before we make a deep dive, just wanted to say that the income tax bill 2025, barring the few concepts, does not introduce the new changes into the Income Tax Act 1961. The ethos of the bill has been to simplify the language. Over a period of time, there has been number of changes. I think over 6,000, over 4,000 amendments have been made into the 1961 Act since the introduction of 1961 Act till 2024. So, with these kind of sweeping changes over the last 5 or 6 decades, the language has become quite a challenging, even for the professionals like us. Sometimes the interpretation takes time. Sometimes we are not even certain what the interpretation of the legislation is, whether it's going to get upheld into the courts of India or not. So the ISO, the objective is to simplify to an extent that even a common man can understand. So that's why you will see the number of words that has been used into the income tax bill has been reduced drastically. There are more formulas rather than the words. So suppose if a particular percentage or a particular formula needs to be described into the legislation, previously the words used to describe the formula. Now this has been done away. Wherever possible, they have tried to prescribe a formula which is easy to understand. So before we jump into, first of all, let's try to see whether the conceptualization of the income tax, whether the levy of tax, this particular thought is is given by the Britishers, or it was existing even prior to the Britishers into the pre-colonial era. Rather, if you see that the concept of taxation was there into the Vedic time as well. If you see into the Vedic time as well, if you try to read the Manusmriti or the Artha Shastra by the Kautilya, it also contained the concept of the taxation, not in a very express term, but it used the concept that there has to be a levy, there has to be a levy for the benefit of the exchequer, so that the exchequer, that means the government, that means the kingdom, can actually provide protection and growth for the people. And this particular collection needs to be made by the reliable people, by the some credible people within the society. So the concept of tax actually date back to the ancient times, even in the Vedic period. And even if you see the Artha Shastra by the Kautilya, there was the first time when we see some kind of an express language upon the taxation system. It was written taxation should be a balanced, and it should not overburden the citizens. Over taxation can actually damage the society. So here was the first time when we have seen there was an express mention of the direct taxes, that means income taxes. And this again gets carried forward with the Mauryan Empire. Mauryan Empire further emphasized the importance of the tax, not only emphasized, but it also detailed the system of taxation. It has divided into various parts. For example, taxation upon the land revenue, taxation arising from trade and commerce. So there were separate provisions. Rather, I would not say provisions, but there were separate system for tackling different source of income: land revenue, trade and commerce, mining, professionals, wealthy and the property tax, revenue administration. There were system in place how the tax should be collected. There was a tax revenue system. Similarly, when we go to the Mughal era, the same things continued. Rather, Mughal era has another levy of tax called jizya tax, which is basically levied upon the non-Muslim for the purpose of providing protection to them. And also, the ZAP system, which is basically a scientific system, which is uh, which is linked with the land. That means the productivity of the land and the measurement of the land. But ultimately, it was a kind of a tax only. Now, thereafter, when we move to the colonial, uh, when we move to colonial era, for the first time, Britishers introduced the formal a legislation called income tax in India in 1860, primarily to cover the losses which is arising from the mutiny of 1857. And this particular tax was levied for 5 years. Thereafter, they introduced a license tax act in 1867, and in Thereafter, after the License Tax Act, they introduced a formal act called 1918, Income Tax Act of 1918. I would say that becomes the foundation stone for the 1961 Act, and 1961 Act has become a foundation stone for 2025 Act. So the current 2025 and even the 1961 Act lays its roots from 1918 Act. Rather, if you see many of the provisions of the 1918 Act, you will find those provisions still into the 1961 Act. And if you read the commentaries of 1961 Act in detail, commentaries of the Income Tax Act 1961, virtually every commentary will provide a comparison between 1918 Act as well as the 1961 Act, just to draw what was the rationale at that point in time when this particular provision was first introduced in 1918 Act, and that particular rationale was amended in 1961 Act or not, because that becomes the intention of the legislature. So I would say that becomes the bedrock, that becomes the foundation. 1918 Act becomes the foundation of 1961 Act. And thereafter, immediately after the independence, after a few years of the independence, 1961 Act was passed by the Parliament, which is currently the backbone of the Indian current taxation regime, the direct tax regime. Yeah. Yeah. Now coming directly to look, as we all know that no tax can be levied without the power of the law. Now the Article 265 of our Constitution gives the power to levy taxes, and the Article 265 says that no tax be levied except with the authority of law. Now, the Income Tax Act, that means the power to levy tax is a part of the union list. The power to levy taxes on the income is a part of the union list, except the agriculture income. And we all know why the agriculture income has been the part of the state list. The power to levy tax upon the agriculture income vests with state. And this is how the distinction to levy tax on various sources of income has been divided. That means all sources of income except agriculture with the union list, and agriculture income with the state list. Uh, Now you can see what are the tax collection from the 1961 Act. So you can see so we have taken the data for the last 5 years, although this data is slightly distorted because of the COVID. So that's why you can see there is a drip into the collection in 2020, in the financial year 2020, 2021. Prior to the COVID, the collection for the direct taxes was 10.5 lakh crores, and it got dropped to 9.47 lakh crore. Again, it got rebounded to 14.12 crore. So if you compare 14.12 crore with 1920, which is 10.5, there was a jump of 34%. That means pre-COVID and immediately post-COVID, the economy expanded and there was a jump of 34% approximately. And many times we also correlate the growth of the economy with the direct taxes, because look, in case the income of the citizens or the resident increases, that becomes rather that has a direct nexus with the growth of the economy. So that's why you can see, in case our economy is growing at a at a healthy 7 to 8%, you will also see similar growth into the collections of the direct taxes also, and which is reflected on the slide also. In 2022-23, there was an again 17% jump of the collection of the direct taxes, 14.12% to 16.63%. Although during this particular period, the economy was only growing at the rate of 6 to 7%, but still we saw the jump of 17% from 2021-22 to 2022-23, partly growth in the economy and partly because of the increase into the taxpayers. Similarly, the growth trend continued in the next fiscal year also, 2023-24, from 16.63 crores, a lakh crore from 2022-23 to 19.6 lakh crore in 2023-24. So approximately 17.85% growth. And we have seen the news also that it is quite expected that in the current that in the last financial year 2024-25, there has been a growth between 17 to 20% in the direct tax collection numbers. although the final number is still not out. I think there is a consolidation. The number will be consolidated, and thereafter it will be put into the public domain sometimes in the last week of April or sometimes in May. Now, as you can see, what is the purpose when a legislature passes a revenue bill, or rather a direct taxes bill? So these are the certain principles which a legislature want to which the legislature want to achieve by 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 passing the income tax related bills, or which is a revenue bill. So the objective is not only to collect tax, but the objective is to bring parity. For example, economic growth and the economic employment. Lower taxes will lead to more disposable income. So, and the more disposable income will increase the consumption of the Indian economy. And if the consumption gets increased, then there is always a fear of the inflation. So it is not always recommended that you should go for a lower tax regime. Uh, because lower tax regime can actually increase the disposable income, which has a direct effect upon the inflation. Similarly, it is also not recommended that you should go for a higher tax regime. If you go for a higher tax regime, there will be less incentive for the people to make further investment, because there will be direct impact upon their profitability, which leads to less disposable income. And it becomes a vicious cycle. So somewhere within the taxation regime, one has to maintain a balance. The taxes should not be on the higher side of it. The taxes should also be not on the lower side of it. The one of the objective of the taxes is to bring social equality. So a progressive system is something which has been always been associated with the social equality. That means you cannot tax all the citizens with a straight jacket formula, with a straight jacket percentage. You need to have a slab system where the person belonging or other person earning on the lower end of the spectrum should be paying lesser taxes, and the person earning at the higher end of the spectrum should be paying more taxes. So India follows this particular progressive tax system. Whether this particular progressive tax system is working in our favor, or whether we should also need to tweak this slab, that is something that we are going to discuss in detail during the course of the discussion. Taxes should also encourage the manufacturing, and we have seen. Uh, so I think 2 years back, there was a special tax rate for the manufacturing company, which is a 15% tax rate in comparison to the normal tax rate of 25%, 25.17%. So this particular tax rate was there for, I think, for 4 or 5 years, and just 2 years back, this particular tax rate was abandoned. The condition was that it should be available only to the new companies engaged into the manufacturing of any activity. So long as you are engaged into the manufacturing, the government granted a concessional tax rate of 15%. And in my knowledge, there are many companies who have availed this particular concessional tax rate. But since I think India also need to become competitive, and these were the arguments which were taken by the government, that there has been the enough room which has been given for the industry to set up a new manufacturing, and that's why we are just having a sunset clause for this particular tax rate. And 2023, it was the 31st March 2023 was the last date for availing this kind of a tax rate. That means 15%. That means in case someone has set up the manufacturing facility before 31st March 2023, it can avail 15% tax rate for the lifetime of the company, any income arising from the manufacturing activity. And it has not done the, I think they have missed the bus. Now, there are certain issues also with the 1961 Act. So as we can see, there are this particular 1961 Act, since its introduction into the Parliament in 1961, and it was effective from 1962, 65 times this particular Act has been amended, and approximately 4,000 amendment has been made. And over a period of time, with this so much of amendment, it becomes very difficult to comprehend what the legislature is intended to, what is the legislature is trying to convey by virtue of a particular amendment. I think the reason has been, look, ultimately the legislature is being drafted by the human beings. A draftman changes over a period of time. So many times the spirit and many times the intention with which a particular provision was introduced was overlooked, and some new draftsman has been drafting a particular provision with completely new outlook, has not given credence to the spirit of the provisions with which it has been introduced. So over a period of time, this particular act has become complex for the taxpayer to understand and to comply with. The 1961 Act has in totality 819 sections, which include subsections also. So currently the income tax had 298 sections and approximately 14 schedules. But if you total all the subsections within these 298 sections, it becomes 119 sections, 119 provisions. Annual changes have been made by the union budget, and sometimes we have seen some years where the budgetary announcement were made twice a year. Not in terms of budgetary announcement, but a full-fledged change. For example, sometimes when we see the budget was announced on 1st of February, thereafter there was a need for further amendment, and the another amendment comes sometimes in September, October, which is again a full-fledged amendment. So more than one time also, this is not uncommon under the Income Tax Act to have the changes. There are certain provisions which are quite outdated, but still a part of the legislation. It becomes so that, so for example, Section 80 CCA, currently it is no longer applicable, but still it's a part of the 1961 Act. As I said that 1961 Act lacks simplicity and clarity, and it is very difficult to interpret the act without any professional help, although this is a boon for us, but it is a nightmare for the taxpayer. It has also attracted high litigation over a period of time. Rather you can see the Income Tax Act is the single largest source of litigation by the central government. So within this, rather there are so much of litigation that even it is even the GST litigation is lagging behind. And if you see before the GST, there was a concept of VAT. Even the VAT litigation is lagging behind with the kind of litigation that we have seen into the 1961 Act. And rather a significant reason for the litigation is attributed to the complexity of the provisions. Now, coming to the Income Tax Bill 2025, that was the need of the Income Tax Bill 2025. And even the Honorable Finance Minister Nirmala Sitharaman also said that they don't intend to introduce any new provision barring the few new concepts. It is basically simplification, rewordings, trying to avoid complex jargons of the definition, trying to have a very user-friendly and reader-friendly language into the Income Tax Bill 2025. And to an extent, they have done their task also. If you see the language into the Income Tax Bill, there are shorter sentences. Various subsections has been divided into the independent sections. A discussion on a particular subject has been contained at one place instead of having at a number of places. That also brings the complexity of the current Income Tax Act 1961. So if you suppose want to talk about the taxation of the non-resident, at least I think you have to go to 7, 8 places in order to see and analyze the taxability of the non-resident or the foreign companies. But now these provisions have been contained at one place so that a reader can just read 1 or 2 pages and thereafter can get a gist of what are the taxation laws are trying to convey. This new legislation is intended to be effective from 1st April 2025, subject to the passing of the bill by the Parliament. 2026, subject to the passing of the income tax bill by the Parliament by both houses of the Parliament, and thereafter receiving the assent of the President. Tax rates and regime for individual and corporations largely remain unchanged. There has been no change into the slab rate. There has been no change into the corporate tax rate of 25.17%. This has been again carried into the new income tax bill as well. Now, coming to the broad comparison, yes, this particular bill has a simplified language. Approximately 1,200 provisions are there. 900 explanations have been removed from the Income Tax Act. So currently, the Income Tax had 900 explanations which has been removed. Use of active voice is there instead of the passive voice. Longer sentences have been reduced to the shorter sentences. Simplified compliance, simplified the compliance burden has been to a large extent has been simplified. So, for example, if a particular compliance is spanning upon filling up of 3 forms, they have tried to contain into 1 form. As I said that the formulas are not there into the words. Now they have tried to give formulas into the formulas itself. For example, the one example which we have on the slide is section 43A. Previously, such a complex wordings were there to describe one formula. Now they have introduced instead of the word just a formula. Consolidation of various provisions under a one particular subject has been there at one place. Outdated and redundant provisions have been done away. One example of the simplified language, for example, the currently you will see the Income Tax Act has notwithstanding anything contained. So whenever a particular provision of the Income Tax Act want to override the other provisions of the Income Tax Act, they use the word notwithstanding anything contained. Now this has been done away. Simplest word irrespective of anything contained. So this is just one illustration, but wanted to convey that a simplified version is there. Look, there are certain inherent complexities arise with any kind of a tax statute that we can't help with. But barring that to an extent possible, yes, there is a genuine attempt which has been made to simplify the wording. For the another example is you will find at various places the usage of the word in accordance with. Now this has been replaced with just as per the applicable law, as or as may be prescribed, that we commonly used. On the screen, if you can see, we have just tried to compare the two provisions. For example, there is a provision under the Income Tax Act called 201. As you can see, it's a the provision 201 has quite a lot of many words, not divided into sub-paras or into the bullets or into the pointers. Without changing the meaning of section 201, there is a provision called section 398 of the income tax bill. Number of words have been reduced and they have tried to put into the bullets or into the pointers. Yeah. This is another comparison of 1961 Act with 2025 Act. So current 1961 Act uses 5,12,000 approximately words. The 2025 bill uses 2,59,000 words. Chapters has also been reduced from 47 to 23. Sections has also been reduced. Total number of sections from 819 to 536. Schedules definitely has increased because what they have tried to do, they have tried to concise it at one place. So that's why the number of schedules has been increased from 14 to 16. Tables has significantly increased. Again, again, in order to simplify the terms, rather they have tried to put too many things into the tables and try to refer to the tables instead of dealing into the main provisions. Formulas has increased from 6 to 46. Yeah. Now coming to the broader concepts of, so the idea is not to take into each and every provision and the kind of changes which has been made, because as I said that not too many things have been tinkered in comparison to 1961 Act. But we want to touch upon just few concepts which we think that it's going to be relevant to understand what are the changes between 1961 to 2025 bill. So many times, if a reader reads the 1961 Act, there is a concept of previous year and the assessment year. And it's very difficult to understand what is previous year and what is assessment year. And let me just try to explain. So what is previous year? For example, if you're earning the income in the financial year 2025, 2026, it is called the previous year. This income is going to tax in the assessment year 2026-27. That means for every previous year, there is an assessment year. Previous year is the current year. Assessment year is 1 year succeeding the year. So we are talking about the taxation of income of 2025-26 financial year, but we are using two different concepts, previous year and the assessment year. Now this has been done away. There is only one single term which is called tax year. And more so, if you read the budget, whenever you read the budgetary announcement and the tax related proposals, after every announcement, there is a line, this particular amendment shall take effect from 1st of April 2026. So sometimes the reader thinks that this is not for example, I'm talking about the budget 2024. Sorry, the budget 2025. So with all, so if you see the budget 2025, the proposals pertaining to the income tax, it will contain a line that these changes shall take effect from 1st April 2026. So many times the reader think that these are the changes not for the current financial year, that means 2025-26. This is going to get applicable to 26-27, but that's not so. When they refer assessment year 2026-27 or 1st April 2026, it means financial year 2025-26. This is something which is not so common, but now they have tried to address it because that becomes sometimes very complicated. You need to, and sometimes what is being written literally actually means literal. First, there are many provisions, even after written, these changes shall take into effect from 1st April 2026. It doesn't mean that they are going to get implemented for financial year 2025-26. It actually means it gets implemented from the subsequent year. You need to see what is the particular provision, what is the intent, and whether it's a tax administrative provision in order to read this particular 1st April 2026. So now this has been done away. This becomes this, look, this is not only complicated for the common man, this is also complicated for the professionals. Yes. This is something which is, this has been going into the circles over not only on the social media, but also on any website pertaining to, or rather discussing the changes into the Income Tax Bill 2025. Uh, so now there is a concept of virtual digital space. And what this particular term virtual digital space defines, it means an environment, area, or realm that is constructed and experienced through computer technology and not the physical tangible world, where user interact, communicate, and conduct activities using digital technologies like internet, cyberspace, and electronic data. So as you can see, the definition of virtual digital space has been expanded, and you can imagine any kind of a even the current technology and the upcoming technology, even the metas of the world. You will find this particular definition encompassing all sorts of technology, and the idea is also to have this particular definition so wide so that anything under the sun gets into the ambit. And how this particular definition has been used, this particular definition has been used into the search and seizure related provisions. That means, suppose if an income tax authority or an income tax officer knocks the door and want to search and seize the premises just to detect whether there is an income tax evasion or any kind of a document which can suggest any kind of an income escapement, so they need to rely upon certain information as well as documentation which has been held into the premises of a physical state. So currently the income tax provision is greatly harping upon the physical space. Now with this particular introduction of the VDS, they can even try to have a sneak look into the email server, social media account. They can even confiscate your phones and try to see what you have posted upon the social media account, online investment activity, trading platform, any kind of a mutual fund platform or a stock trading platform, how much investment you have made through those platform, even the cryptocurrency, bank account, any kind of a website which is being used for storing the data or the details of the ownership. For example, there are many people who has a habit of not remembering the password, and it is virtually impossible to remember the password. You just store the password on the notes. If you are using the iPhone, you are just storing the password on the note. They can very easily get access to this particular app also. Digital application platform or any other space of similar nature. So the vast sweeping authority has been given to the income tax authority to take possession of the virtual digital asset and the virtual digital space and try to gauge any kind of an information which has not been accounted in your income tax return or your books of account, which has been stored in such in the virtual digital space, and which will again definitely the intention is to use this information for the purpose of making assessment and for the purpose of seeing whether the income has been escaped, whether the taxpayer has actually correctly disclosed the income or not. And the definition also includes, so currently we have a definition, not a similar definition, but sometime, but seemingly similar definition called virtual digital asset. For example, cryptocurrency, no, the NFT tokens or any kind of a digital asset. But the difference between virtual digital space and the virtual digital asset is just being restricted to the asset. That means some kind of an asset which you have purchased by utilizing the legal tender of money. Even that legal tender of money has been converted into a cryptocurrency, and you have utilized you have actually expanded cryptocurrency to acquire another asset, but the trail should be from a legal tender of money. Now the difference between VDA and the VDS is that particular asset which has been stored on the VDS, they will have a power to access that virtual digital space where the asset has been stored or transacted, which gives some kind of a broadening power. Yeah, sorry. So the income from business connection. So currently the 1961 Act also has this kind of a concept for, so currently 1961 Act has a section 9, which actually defines certain incomes, not certain income, which defines certain sources of income, which will find trappings within the 1961 Act. And there is a section 9 which says income either accrue or arising in India or deemed to accrue or arising in India. And what is this term accrue or arise or deemed to accrue or arise? You will find the details of various provisions under section 9. So there is one important concept under section 9 is the business connection. So any kind of an income which may be arising to any person, which includes individual foreign companies from business connection in India, will be taxable in India, because India follows the source rule theory. That means whatever has been sourced from India will be taxed in India irrespective of your residential status. Now, currently, the way that a business connection has been defined, obviously into the widest of the term, but there is a limitation upon the taxation of business connection. That means you can only tax that kind of an income which is reasonably attributable to business connection. For example, let me just take an example. For example, if a foreign company is coming and trying to source the raw material solely for the purpose of export. So first of all, whether this is a business connection, yes, this is a business connection, because there is some kind of activity which is happening in India. And since this particular export of raw material to the foreign company, and the foreign company is ultimately utilizing this particular input for the purpose of either trading or for the purpose of further manufacturing. So foreign companies are earning some kind of an income, and that particular income, some kind of a nexus is there with India, because India has actually exported the raw material. So that particular reasonably attributable only gives the power to income tax officer that he has to compute the income in such a manner which is reasonably attributable to the activity of sourcing in India. He cannot tax the entire income which is being attributable to the, or which is being earned by the foreign company. Only the activity which has been performed on Indian soil, that particular activity and the nexus of that particular activity has to be reasonably attributable to that particular activity. Now, surprisingly, these words are missing. So we are not very sure whether this is intentional or whether in the sake of simplicity or rewording that these words has been done away. But this has a sweeping consequences. If these words are not there, technically any kind of an income of a foreign company, even a small nexus is with the Indian soil, becomes taxable in India. Thereafter, one has to go to the court, and one has to actually apply the old law of electronic corporation, which is a 7-member Supreme Court judgment, which says that you can only tax the income which, if it has some kind of a nexus, and that judgment also says that that particular nexus, only to the extent of nexus you can only tax, which has been imbibed into the 1961 Act by using the word reasonably attributable. But now these words are missing. So there is a question mark whether we still need to rely upon the electronic corporation judgment, the old judgment of 1960s, in order to import the word reasonably attributable, because these words are missing. Uh, so I'm going to skip because this is just how the schedules has been divided into the income tax bill. Schedule 2 is there, which actually aggregate all sorts of agriculture income. Schedule 3 is there, which certain eligible person for exemption, such as partners of the firm or the HUF. Schedule 4 is there, which gives exemptions to the non-resident, which is currently also there into the 1961 Act, but it is being spread over all over the 298 section. Now this has been aggregated in Schedule 4. Schedule 5 is there for the exemption to the business trust sovereign wealth fund, which is currently again there into 1961 Act. There is no new exemption which has been introduced. So I'm just going to skip this. This is just a illustration how the schedules has been carved out into the Income Tax Bill 2025 and how the aggregation of various provisions is there. Yeah. So the new tax regime, which we have been talking about with this particular year budget, that 12 lakhs has been made exempted by virtue of a rebate. So if someone is just earning up to 12 lakhs rupees per annum, there will be no taxation. This particular regime, the new tax regime, which we all say, is only applicable to individuals and HUF. Now there is a section 202, which is quite comparable to 115 BAC. This has been extended to the other entities also called association of person, body of individual, and artificial juridical person as well. So this is the old regime and there is a new regime. As we all know that currently India is following two regimes of taxation for the individual taxes. One is old regime and one is new regime. So these are the slabs of old regime, which is there into the income tax bill 2025 also. And this is the new regime. As you can see into the new regime, only 4 lakh rupees are being exempted from the tax. How this has come to 12 lakhs? By virtue of another rebate, by virtue of another provision, which says that in case you are earning up to rupees 12 lakh rupees, there will be a rebate equal to the amount of tax computed as per this particular slab, and this will get deducted from your total tax bill, and this is how that you will achieve a zero tax bill. But this is only applicable for the income taxpayers who are earning up to 12 lakhs of rupees. In case you are earning suppose 14 lakhs of rupees, then you will fall under this slab without the rebate. So that means it is not like that 14 minus 12, so you are just earning 2 lakh rupees and then you apply the tax rate as per this particular slab. No, 14 lakhs, there will be no rebate and you will be just falling straightforward into the slab. Yeah, I'm just going to skip this. Yeah, so the charitable institution, uh, this is one of the most complex chapter under in the 1961 Act. And on year to year, I think for the last decade or so, I haven't seen a union budget which does not contain significant changes pertaining to this particular industry, which is called the charitable institutions. So at least for the last decade or so, many times, so even the regime has been upturned. That means what you were following the law prior to the year has been changed massively for the next year. And this has been done twice and thrice in the last decade or so. And in the year where there has not been a massive change of the concept for the taxation of the charitable institution, but significant changes has been introduced. The income tax bill 2025 does not contain any further relaxation for the charitable institution. The same exemption will is still being continued for the charitable institution. Yes, but from the wording standpoint, yes, there has been a simplicity into the wording. Even as you can see, the nomenclature, now they are using the word registered, not for profit organization. Earlier societies, trusts, Section 8 companies, all sorts of nomenclature we have seen being used under the legislation. Uh, Failure to maintain books of account, file tax return, conduct tax audit would result would result in lose of the exemption. And now they have provided. Suppose if you lose the exemption, what is going to happen? the taxation will be on the net basis. That means you need to compute your income tax liability, receipts minus legitimate expenditure. Whatever comes out to be, you need to pay tax on the net basis as your regular income. Heads of income, largely the same. Currently, in the 1961 Act, we have these five heads of income: salaries, income from house property, profit and gain from business profession, capital gains, income from other sources. So these five head has largely been continued into the income tax bill as well. I'm not going into the niceties of the salaries. Largely, the concept of salaries remains untouched. If you are earning salary from India or from the Indian employer, your salary will be liable to be taxed in India. Employer will still be continue to withhold appropriate amount of taxes from while making payment of the salaries to you. So conceptually, there is no change. And these are the so wages, gratuity, annuity, pension, perquisite, these are the nomenclature, these are the various heads of taxation of the salaries. Again, the tax slab remains the same for the salary as for the individual taxpayer, the same tax slab. Yes, for the salaried class, you get an additional 75,000 standard deduction, which is not there for the non-salaried individual taxpayer. So if you include this 75,000, your total exempt income comes out to be 12.75 lakhs. So income from house property also largely remains the same. Carry forward of loss of house property also largely remain the same. Profit and gains also remain the same. If you are earning, if you are engaged into the business activity, you will be taxed into the profit and gains of business profession. You will be required to maintain books of accounts. You will be computing your tax liability as per the provisions of 1961/2025 Act. Yes, the number of sections under the profit and gains has been drastically been reduced. Yeah. So currently 1961 Act does contain a concept of residual sections for because Income Tax Act, even the 1961 Act and the 2025 Act cannot have a particular provision for dealing with a particular type of expenditure. So Section 37 is a residual section which says that in case you are incurring a legitimate expenditure for the purpose of business, wholly and exclusively for the purpose of business, and which has not been dealt in any other provisions of the 1961 Act, will be given deduction under Section 37. So this particular Section 37 is still being continued as Section 34 into the income tax bill. The only thing which is not being allowed under Section 37 is any expense which has been incurred as an offense or prohibited by law. Any particular amount that you are incurring for settlement for the alleged violation of law will not be allowed. And rather, the wordings, offenses or prohibited by law, these are very complex wording in a sense. There is very limited jurisprudence what will qualify to an offense or prohibited by law. And there is an existing jurisprudence which is spanning upon various judgment, what is being qualified as an offense or prohibited by law. For example, if I am a listed entity and I delay some kind of in compliance or filing a particular form by 2 days, and SEBI levies me a penalty, a stock exchange levies me a penalty of suppose 2,000 rupees per day, and since I've delayed by 2 days, so 4,000 rupees penalty. Whether this will fall trappings of this particular Section 37, there is no clarity on the law. Rather, the income tax bill was an opportunity to address all these kind of things which have been dealt into the jurisprudence, but I think their objective is not to change the law, not to give further clarification or or rather clarity upon the various issues. I think the objective is to just simplify the law. So all sorts of controversies which is there into the 1961 Act will get carried forward into 2025 Act. Maybe because of simplicity, suppose there is an existing jurisprudence which has been developed over the 5 decade or decade in 1961 Act, and that particular nomenclature and that particular terminology is not being used into 2025 Act. There will be a big question mark whether we can use the same jurisprudence or not. I will just skip the long-term capital gains rate remains unchanged into the 2025 bill also. Long-term capital gains is 12.5% and short-term capital gains on the listed security is 20%. And if it is not a listed security or any other asset, it remains the same as per the normal slab rate. So there is no change into it. Income from other sources, there is no change into it. Yeah. Now what is there? So sorry. Now what is there? How there is an impact upon the taxpayers? Now look, there is not too much of impact upon the taxpayer, barring the few controversies like we touched upon the virtual digital space. Like we touched upon the definition of the business connection, whether reasonably attributed or not. Barring these few new changes, there is not too much of impact upon the taxpayer. The similar provisions of the faceless assessment is being carried into the 2025 Act also. The objective is to have a more transparent tax assessment and reduce interaction. Although I have my own views whether the faceless assessments are working. Now we are, I think, in the fifth or sixth year of the faceless assessment and the tax administration, whether this is working in the India's favor or not. So this is something which is a debate for another day. There is one school of thought which says that the faceless has actually reduced in reducing the corruption, but at the same time things are sometimes quite complex, and it becomes difficult to just give all sorts of argument in writing, and the tax officer just reads your submissions and understand the complexity of the subject, and currently he is just required to read your summation and pass a assessment order. Whether that is being working in the favor of corporate India or not, that is something that I think that is a bigger debate for another day. Easier dispute resolution is still there, a part of the 1961 Act, and it is being carried forward into 2025 bill also. Yeah. Now, the major controversy, as we have been seeing, and we slightly touched upon at the time of virtual digital space also, with the introduction of such a expensive definition of virtual digital space, whether we call this to be a threat to digital privacy or not. So in case of a search and seizure, these kind of powers which will be invariably being utilized by the tax officer, and after passing of the 2025 bill, it will be quite common, it will be quite ordinary for a tax officer to ask for your phone. Currently, the tax officer does not ask for your phone. They just request you to keep your phone, or rather, they deposit the phone at the entrance. You are not allowed to carry the phone, but they do not access your phone. Yes, they do access your laptop, they do access your servers, but they do not access your phones. Now, with the passing of 2025, it will be quite an ordinary feature for the income tax officer to ask for your phone, password, face lock, various password of various apps, just to see what kind of funds or what kind of money that you are dealing with. And they will try to corroborate, they will ask you to corroborate the funds that you have been using over the digital platform with your income, whether these has been declared as a part of your income tax return or not. And you should be having an extensive records of anything of any kind of a digital footprint that you are having. You should need to have a backup evidence and the record that whatever we have been investing into the trade, into the stock market, securities market, this has been totally accounted for and has been shown from the into the income tax return. These investments have been made from the post tax money. Yeah, the another controversy that we have been seeing over the net is the interpretation of tax treaties. So currently, there is no provision. So there is a concept of Income Tax Act 1961. There is also a provision under the in the 1961 Act that if a foreign resident or a foreign company is governed by the tax treaty, then it has an option to avail the provisions of a tax treaty, and whichever is beneficial, that means the provisions of 1961 Act or tax treaty, whichever provisions are beneficial, the foreign company, the foreign resident can opt to govern by the beneficial provisions. Now, many times happen that the tax treaty contains a particular term which has not been neither defined into the treaty nor defined into the statute. Though the most of the treaties contains a residual that and provide for such kind of a situation. For example, the tax treaty generally provides that in case a term which has not been defined into a tax treaty and unless the context requires so, then the power to define such undefined terms has been given to the source state. That means where the income is being arising. Now with the exercise with this particular exercise of power, they have introduced one provision which says that any undefined term into the treaty can be defined by the central government by virtue of a notification. So that means to a large extent, they have codified this particular treaty provision where it says that any undefined term can be defined by the respective state. That means largely the source state. They have codified this power into the Income Tax Bill 2025, and they have said that by notification, they can define this particular term which has not been defined. Now the controversy, yeah. Now the controversy which has arisen is that the power to define undefined treaty terms is so expensive, and this has been provided in their FAQ also. There can be three, four situations where they can define the undefined term. The first situation is where there is a term which has been used into the tax treaty but not defined into the act, and has it but has not been defined into the tax treaty, but there is a definition into the income tax bill. Then obviously the definition into the income tax bill shall be construed as a part of the treaty. If there is any term which has been used in the agreement but neither defined into the treaty nor into the income tax bill, then it will have a meaning which has been given by the central government through the notification. If any term which has been used in the agreement and is not defined in the agreement or in the bill or even in the notification, whatever notification which the central government has come out till date, then it will have a meaning given into the act of central state relating to taxes, or in its absence any other law of central government which has similar terms or which has the same term. So the power, so basically the controversy is not that now the income tax bill 2025 contains this kind of a provision. The controversy is arising with the sweeping power which they have retained into the income tax bill, and the treaty also says unless the context otherwise requires. So who is going to decide whether the treaty is actually giving a definition of of a particular term in a particular context but not in the other context? There can be varied situations where there is a definition which has been provided into the treaty, but that definition can only be interpreted in one particular circumstance, but not all the circumstances. So by using this particular provision, the Indian government can actually give the meaning to cater all other circumstances as well. So with this, I will just end the presentation and happy to take any questions.
It's very comprehensive overview of the new income tax law. I think one of the things that we are all sort of dealing with is how many laws have been so comprehensively reformed over the last 10 years. And so now I open up the floor to questions. We have also an audience on Zoom. So if there are any questions from the Zoom audience as well, we can take those. Okay, I think that there's been a lot of information to digest. So while people are collecting their thoughts, hey, I want to pose again the question to you with which we started. So keeping Dr. Ambedkar's vision of a taxation system which is efficient, equitable, and works to the advantage of the poor and not the rich, how do you see how would you evaluate? Like if in two sentences you would say, how would you evaluate the new bill?
So look,
It's simplified a
yeah,
lot.
it is just a simplification, an old wine into the new model. There are not too many new concepts except for the VDS and just two or three more new concepts. So the spirit of the 1961 Act has been carried into the Income Tax Bill 2025 as well. So, but if you ask a question whether we are doing a justice and what the mandate which has been rather the legacy which has been given by Dr. Ambedkar to us, I think that's a very larger debate because look, no taxation system can be developed with some kind of inequalities or some kind of a differentiation or a distinction. No two people are alike. Similarly, the tax system also does not, or rather should not treat two persons alike. We have a progressive tax system basis. There is always a thought whether we are taxing our HNIs or the high net worth individual enough. So if you look at the tax systems or the tax rate globally, even the US tax at 45%, and there are other major matured economies which are taxing their resident to the extent of 45-50%, even exceeding 50% also. And till 2023, India also used to tax its super rich to the extent of 42 to 43%. Now this particular rate has been lowered to 38 to 39%. So somewhere you can imagine, even if the HNIs are paying taxes to the extent of 38-39%, but that is another topic, or rather that's another issue. How many HNIs are paying this kind of a tax rate? Whether we are having the enough HNIs or the kind of tax return which is being filed under this particular tax bracket of more than 5 CR, there are only handful of HNIs. You can count them into the thousands. And if you go on the road, or you will find these particular number into one colony itself. So whether we are tracking or whether we are tapping the HNIs, I think the answer lies into that. But our tax rates are quite competitive. Whether all the HNIs are getting into the trapping, that is, I think, a big question mark.
So, related to that, it was interesting that you used the phrase old wine in new bottle because that was actually the title of our talk, the second talk that we had on the criminal codes, which also have been completely overhauled. So, I mean, and the point that Sri Singh, who gave the talk, was also making that so many things have been changed, so-called, and simplified and so on, but actually some of the problematic things still remain in the criminal codes. And so, to that extent, it's like,
It will
so what
remain,
is the
yeah.
motivation behind these major overhauls of these laws that we are seeing on the? That's one question. And another question from our Zoom audience is, what are the implications of this bill for the nonprofit sector? And I think it's very pertinent to ask this question because not just in India but all over the world. I mean, it has been in the news about how, Harvard University, which is my alma mater, President Trump is threatening the nonprofit tax exempt status of universities. We've definitely seen that here as well. So, what are the implications of the new law for the nonprofit sector, and why is there so much scrutiny, so much use of provisions of surveys and search and seizures being used for nonprofit
Yeah,
organizations?
yeah. Look, first of all, coming to the not-for-profit organization, as I said into the presentation also, that in the last decade or so, I haven't seen any particular budgetary announcement which does not contain massive amount of changes pertaining to this particular sector, which is not-for-profit organization. Now, whether there is a need to introduce such kind of changes on an year-to-year basis, I think somewhere, suppose if one were to ignore the quantum of changes and the nature of changes, I think we have to also see what are the motivations of introducing these changes on a year-to-year basis. Somewhere, I think the worry of the government is the misuse of the exemption being granted to the not-for-profit sector. And in order to check this kind of a misuse, there is always an attempt to make the changes into the legislation, or rather to equip the legislation so that only the bona fide players get to avail these kind of an exemptions. Now, look, this is the thought process. But when it comes to implementation, when it comes to the tax officer are pro revenues. So first of all, these we have made the legislation for the not-for-profit sector quite right. When it comes to interpretation by the tax officer, he make another level of triteness into the legislation, and that's why we have seen in last decade or so the not-for-profit organization has actually faced the heat of the Indian government. Now, And if you also take a step back and try to see, there are various regulators for the not-for-profit organizations. Look, what is the worry of the government? That a misuse of this particular exemption. The misuse stems from the fact whether a particular organization which is being incorporated with a particular objective, whether that particular organization is working toward that objective or under the garb of objective, something else is happening. There are various regulators, and whether this particular checks and balances is the domain of the income tax department or not, that is another question mark. But I think why the income tax department maybe has taken a step forward and try to address this kind of a checks and balances, because for want of a single regulator. Now, suppose if I were to see the regulators for the not-for-profit sector, we have Companies Act for the Section 8 companies. We have societies, if you are incorporated as a society. We have Trust Act, Indian Trust Act, if you are incorporated as a public trust. If you are incorporated as a public trust, we have another act called Public Trust Act. We have Income Tax Act. We have Foreign Contribution Act, which is called the FCRA. We have Religious Institution Act also, which actually governs the institutions which are dedicated for the religious institution. We have Religious Societies Act. We have Registration Act. We have Stamp Duty Act. So at least we have 10 to 11 legislation which is governing this particular sector, not-for-profit organization, and there is no single regulator which has been vested with the authority to oversee the functioning of the not-for-profit sector. There has to, so to my mind, in case we have a one regulator which is responsible for vetting the activities of not-for-profit organization, and once you get an NOC or once you get a stamp of that particular regulator, others should follow. And I think if we can solve this jigsaw puzzle, if we have one regulator which actually has a over supervisory power over the not-for-profit organization, thereafter we will see less and less challenges under the income tax domain as well.
Yeah. Okay. So you're saying the solution may lie in a better regulatory framework for the non-profit sector rather than
Rather than, yes,
going through the
yeah,
income tax law
yeah,
to go after them.
and basically my solution is also coming from the fact, if you see all the jurisprudence under the not-for-profit sector, um, everywhere, rather in almost in all the litigation, the solitary challenge is that it is actually not serving, or rather it is the solitary challenge from the income tax department is it is not serving its objective, that means which is enshrined in your memorandum of articles or on your charter document, it is going beyond it. So, which actually is the job of a single regulator. This is not the job of the income tax department. So suppose if a single regulator gives you the clean sheet, then the income tax department will be bound to go by it.
So that's where the
That's where,
reform is needed actually. Partho?
Yeah, hi. So I was just, while you were presenting, not an area I look at much, but I was looking at other tax laws, especially, let's say, for example, the Chinese enterprise tax law. It's about 11 pages. How does, and I'm sure there are lots of ambiguities, structures in that space. So how does the Indian tax code compare to international tax codes? Are we trying to define too much in this law, and is that why it is becoming so complicated, and referring less to case law and sort of let the cases work out? How does it work in other jurisdictions?
Okay. So I will not take China as example, because China has other legislation which is supplementing their tax laws also. For example, if they want to, for example, if they have to allocate a particular land for a particular industry, so they are dealing with so there are other supplementary legislation which is actually fulfilling indirectly the objective of the income tax law. But when you see the Income Tax Act 1961, and over a period of time, the way that we have used this particular act, if you want to give a fillip to the consumption, reduce the tax rate slightly. If you want to channelize your funds to a particular industry, for example, renewable power, give some tax concessions. So the way that we have worked over a period of time post-independence and during the 90s also, if you want to invite foreign companies, give slightly a concessional tax rate. If you want to divert your fund to a research and development, give an extra deduction. So the way that we have actually tried to give incentive under the income tax law, so the incentive become analogous to the deductions, exemptions under the tax laws. So over a period of time, it has become a channelizing agency also. The Income Tax Act has become an intermediary for the purpose of channelizing the investment into a particular stream. For example, if you want to increase the employment, there is a separate provision which says that if you give employment to new employees greater than a specified number, the 125% of the expenditure incurred shall be allowed to be deduction. For example, I have given one particular example of manufacturing. In order to increase manufacturing, they've introduced a separate rate. And we have seen the results also. We have seen Section 80C related deductions. If you want to motivate citizens that to invest, there is separate deduction. If you invest, we will give you another deduction. And over a period of time, we have linked exemption deduction with the motivation. And this has resulted in our favor also. Only in the rather, I don't have the data, but I know for a fact that our savings have been declined in the last few years. And I'm talking about last few years means last 3 to 4 years. Before that, and rather if you see Section 80C related deduction has also been phased out in the last 3 4 years as well. Before that, India's saving rate has been at alarming high because of these deduction. And so I would not say this has not worked in our favor. This has actually worked in our favor, but somewhere we have been overwhelming also. We should not be solitarily relying upon a particular legislation to motivate the citizens of India, or rather to motivate the citizens to do a particular act. When we compare to the other mature nation, for example, the US, their income tax form, which you file annually, spans to around 35 to 50 pages. Our income tax form only spans to around 10 pages. And I'm talking about the business profession, but not a salaried. Salaried, though, you can even file, so rather, few years back, there is a single pager form also, Saral, just a single pager. So look, tax laws has been complicated in the other jurisdiction also. That's why you will find professionals dedicatedly working only on the tax laws.
So there's a question from our Zoom audience. Does the direct tax bill give any incentive to stakeholders who adopt sustainability practices and the Paris Agreement on climate change, like usage of new technologies, restructured companies, M&As to achieve the goals of climate sustainability?
Nothing. As of now, nothing. So I think even if the government were to give incentive upon the sustainable energy, reliance upon the sustainable energy, I think the more correct way of giving the incentive through the GST. Maybe you can slash the GST upon the equipment which are in furtherance of sustainable energy. And we have seen also the GST rate has been relaxed for these kind of a product. And under the Income Tax Act, I don't think there's going to be right place and the right subject area where they will be giving exemption, because in the last decade or so, we have been moving away from the exemptions. And if they introduce few more exemption, then again, we will be coming back to the exemption era.
So, Amit, if you've identified, like whenever we talk about income tax, everybody is complaining, especially the salaried class is complaining about the burden that the income
Burden,
tax
yes.
law is placing on us. But you have actually, illuminated for us that actually the income tax law itself is burdened by too many expectations. We are expecting income tax to regulate the nonprofit sector. We are expecting income tax to provide concessions to business. So actually, what we need to do is to lessen the burden
Lessen
of
the
the
burden,
income
yes,
tax
yes.
authorities. But how do we make sure that it's very tricky, right? Because on the one hand, compared to many other countries in the developed world, we talked about Norway when we were discussing earlier. We've talked about the United States. We are not taxing the rich people in our country enough. But at the same time, the problem with too much taxation is that people are fleeing. You talked about the
Exodus,
United
yes.
Kingdom. There's an exodus of the high net worth individuals. So what is the right balance that we need to achieve, and how do we ensure enforcement of that? Because on the one hand, You have listed out all the laws that are governing the nonprofit sector, and the real question that people are trying to establish is whether they are actually complying with the objectives in the memorandum of association. Similarly, we see a lot of tax evasion within the corporate sector. With one of the major claims of this government was actually the fact that they were going to bring back people who had black money and things like that. So what is the best way of achieving these objectives? One, of ensuring that we have the correct taxation rate that doesn't force people to flee, but at the same time we are taxing the HNIs and making sure that the progressive taxation principles are met and that we are redistributing. How do we achieve this balance?
So look, in terms of the tax rate, I don't think that India will have a very significant amount of headroom in increasing the highest tax slab, which is currently at 38 to 39%. A few years back, we have a highest tax slab of 42, 43%, and this particular tax slab has been making news in the circles that India is disincentivizing the entrepreneurs to take chances or to make an investment into the manufacturing or to the other sectors. Now, if you increase the tax, again, these kind of an argument will crop up that India is actually taxing the entrepreneurship. Now, I think the real game changer would be not to increase the taxes, or maybe in case India wants to increase the taxes, the government wants to increase the taxes, maybe by 1 or 2%. The real game changer would be that the major complaint, the major agitation from the HNI community is that if they contribute to the society, they are not getting back. So if we try to address this, for example, if we give certain privileges to the people who are contributing the most to the society, certain privileges, for example, if the government is coming out with a land allocation for the purpose of industrial use, the HNIs who has contributed, he will be given preferential allotment, or he will be given some kind of a preference. If you are traveling through road, you will be exempted from the toll tax, some kind of a small or some kind of a big concession. I think if we could able to achieve a right balance, what kind of concession that we can give or what kind of privileges that we can give to the high net worth individual, I think we will see flurry of income tax return exceeding 5 CR, 5 CR, 10 CR.
But let's not talk only about individuals. What about corporates? How do we ensure that corporates are paying their taxes?
So look, in case a particular company is not paying its taxes, I'm sure it's just a matter of time whether this year, next year, they are going to get caught, because currently the income tax administration is so vastly networked with the digital information, whether you see from the banks, a flurry of information is being downloaded by the income tax department. If you are making any kind of an high expenditure, there is an obligation upon the vendor to report to the income tax department. If you are spending through credit card, there is again an obligation on the banks to report to the income tax department. And they are actually using sophisticated technology, including artificial intelligence, to process this information. So currently, it is very, very difficult if you are earning profit into the corporate sector and not paying your due taxes. It's just a matter of time. You will be facing a scrutiny. Now, whether those taxes are percolating to the shareholder, that is another topic. Whether the companies are declaring dividend or not declaring a dividend, that's why we are not seeing so many of high net worth individual offering income to taxes, because if the company do not declare a dividend, they have not received the money in their own hands, and technically there is no cause of action for them to pay the taxes because they have not received the money. But currently, the surveillance system is, to my mind, is very difficult to get out of it.
See. So, and finally, on the federalism question, do you think that India is following the right thing by, that only this, because in many other countries, income taxes are taxed also by the states, by the municipalities,
Yeah.
and not just the center?
Yeah. So look, our basic structure of the constitution is to give more power to the union. And with this ethos, the income tax has also been given, except for the agriculture income, has been given to the union list. Because it is not only about, to my mind, this is not about the taxation question. It is giving whether you want to empower the union more than the states or states more than the union. So this is basically a question which is on the basic structure of the constitution. So till the time we amend the constitution, and it's not a joke to amend the constitution also. basic structure of the constitution needs to be adhered to. And if the government trying to interfere with the basic structure of the constitution, we have number of judgments which say the basic structure of the constitution cannot be changed. It will be struck down by the Supreme Court.
Great. So if there are no further questions, because we are out of time, any further questions? Okay. Yeah. So the question, if I've understood it correctly, it's a bit unclear, is that whether the income tax department can make informed practices to use the virtual digital space. I guess maybe the question is saying that can there be like protocols and
Protocols, yes.
procedures?
To my mind, I think because this is still a bill and there are enough headroom which has been provided into the bill to prescribe notification, administrative measures, protocols, how they are going to use this particular provision of virtual digital space at a time of search and seizure. I think it's quite early stage to see that there will be no protocols. To my mind, I think there will be protocols set, there will be boundaries defined, how they are going to deal with this information, how they are going to deal with this particular devices.
But to me now it sounds, thank you so much for this extremely comprehensive overview of not just the changes, the positive simplifications that have happened, but also the controversies. And to me, it seems that litigation is probably going to still continue because there are many things that are not clear, and especially insofar as the new search and seizure of, provisions impact on the privacy of individuals. I can definitely foresee more challenges. Plus, of course, we have the questions of technology companies sharing the data. We already have litigation under the the Information Technology Act, the other IT Act, between Twitter on the one hand and the government of India seeking information between Meta.
Yes, yes.
So, I mean, I don't see litigation kind of going down under the
No,
new
no,
law.
look, basically, if you see the 2025 bill and the 1961, it is just a simplification of language. The idea was not to address all the open-ended issues into the 2025 bill. So the litigation, so the issues which are there into 1961 Act will remain the issues in 2021 Act, 2025 bill as well. The legacy of the issue will still continue in 2025. I think with the simplification, the probability of cropping up the new issues may go down. But if a particular issue is an issue, it's going to carry forward to the 2025 bill as well.
So on that, somber note that we are still going to see more litigation, but obviously
We will not be out of business.
so there's going to be a lot of work for people like you to help us, to sort through the litigation ways. But thank you so much for taking the
Thank
time
you,
to
thank you.
to come and talk to us and inform us. This bill is before the Parliament right now, and as informed citizens, we can also sort of express our opinions once we know what the law is.
Yeah,
What the problem with laws is that mostly people are not really aware of the
Aware.
complexities of the law. So insofar as you have, I don't know whether they've managed to fully simplify the law, but you have definitely simplified what is in the law for all of us. So thank you so much for that.
Thank you, thank you, thank you for inviting me. Thank you.
Thank you.
Thank you.